Hey Jeremiah,
Hey Edwin, how are you today?
good. Welcome to the live today. Um, we're so happy to have you. So today's topic is hot, specifically
Wonderful.
what we're gonna start talking about. But please present yourself.
Okay. Hi, folks. I'm Jeremiah Flores. I'm one of the Millennial Team's preferred lenders. I work as a broker. The company I work for is called Barron's Mortgage Corporation. Been in the industry for over 22 years now, so I have tons of experience. And also, just like the whole Millennial Team, bilingual in Spanish, so we can always help out those Spanish-speaking clients. But more importantly, yeah, we want to talk about some cool topics regarding what's available, what programs are still continuing to be available, and some that are going to be modified, and then more importantly, also about the market in real estate in 2025 and when's the best time to buy, and to kind of help answer some of those questions that some people always have in the back of their mind.
Okay. So yesterday, directo al punto. So yesterday it was a big bomb thrown into the market. And I've been hearing a lot of my friends, real estate agents, and also on the lending side, they've been posting about it. FHA. So from what I heard in the last few weeks, the White House is trying to regulate again the federal housing agency, right? That's how they call it.
Yeah, the Federal Housing Finance Agency.
Okay. So with that, yesterday they announced it is not a bill, it's not an option. They already announced and they put a date on it that starting May 25th, 2025, FHA will not longer do some specific type of loans. Can you please let us know what are those loans? What exactly will be changing?
Okay.
And also, what could be the possible solutions for those consumers?
Those are all great questions. So yes, obviously been a little bit of stir in the market. The old rules for FHA financing were the applicable buyers that can qualify would be U.S. citizens, permanent residents, or a work visa, or even DACA. But now, as of May 25th, 2025, there's only going to be the option of U.S. citizen or a permanent resident. So that means they're taking away the visa work, non-permanent resident type of clients or DACA clients like Dreamers for All. So that's going to be an unfortunate part. But obviously, there is other programs available for those type of clients that we can figure out exactly what type of financing would be best for you, so we can try to customize that type of approach of financing for your home purchase. So don't let that be a big, hurdle in the process. Just know that there's always going to be challenges throughout the way, and we'll always figure out which way to navigate to be able to qualify for the best type of programs.
Okay, so now one thing about FHA. So FHA, technically, what it is as of right now, is a federal program. You can say that it is through the
That's correct.
umbrella of the federal program. And usually conventional is more on the private side. And because of that, FHA programs usually offer lower rates,
Mhm.
at least half a point, so people are able to qualify for more. Also, they offer higher approvals because of the debt to income ratio, so people can
Correct.
qualify. I would say probably families that we help. I would say 7 families out of 10 buyers that we help throughout the year. Uh, they usually use FHA loans because they can qualify more due to the lower rates and due to the higher debt to income ratio. So
Yes.
technically, FHA is not going away. So it's not like, hey, it's
Mhm.
gonna disappear. The only thing they just becoming more strict who they can give those type of loans. So you have to be
Correct.
a U.S. citizen and resident only. But
Mhm.
that will be on May 25th. Like if
Correct.
anyone who has a DACA is so we call it the dreamers. Is,
Mhm.
is the people who came to this country as a child and they were able to go to school, so that's they have a specific permit to work here in the United States. They still can buy home with FHA, but
Correct.
do you have to be in escrow before May 25th, or you have to close before May 25th?
That's a good question. From what I understand, you have to be this is all prior to closing. So obviously, you have to be in escrow prior to the 25th of May. The reason why is because once we go into escrow, then we as lenders, what we do is we open up disclosures for the initial loan product of the clients to send out for signatures. But more importantly, as those disclosures go out, then we also have to order what's called as an FHA case number. That case number specific date has to be prior to May 25th of 2025. So it's important to be in escrow prior to the month. And more importantly, as we get closer to that date of May 25th, anything can change. They may also now, I don't want to scare anybody, but they may come back and say, hey, guess what? Now we want loans funded prior to May 25th. It's kind of, this is all brand new to us as of yesterday, the final announcement. But like Edwin said, it's been a little bit of a talking topic for the last couple of weeks.
Okay. So, and also people who have any type of work permits,
Correct.
not a permit, like if they have a temporary residential as well, they won't qualify. If they have a asylum, that's how you pronounce it.
What again? I'm sorry.
Asylum or asilo? I don't know how you pronounce.
You mean as far as like for the work visa, or you mean like the employment authorization card?
Yes. So technically, anyone who doesn't have who's not a permanent resident, who is not a citizen, won't be able to buy FHA. So if you're looking to buy a home right now as an FHA loan, please make sure you get into escrow as soon as possible. It's in California, it's difficult to buy a house anyways. The rates, the prices and everything. So, make sure you get into a house as soon as possible. We don't know what will be the guidelines in the next few months, but this is the first bomb that it gets thrown at us. And also, as well, but now, solutions regarding anyone who's not a resident or is not a U.S. citizen. There's different programs, like FHA is one of, I would say, out of 20 or 100. So there's conventional loans and different type of creative finance that will allow them still to purchase a home, right? It doesn't mean they won't be able to purchase a home at all.
Yeah. Please don't take that information as like now your dream is completely shot from home purchasing. That is not 100% correct. It's just one tool out of many that we can, be able to offer the clients that are non-resident, non-permanent resident, or a non-U.S. citizen. FHA was probably one of the more popular ones because it does require the minimum 3.5% down payment. Now, the other options, there can be other options with just a tiny bit more of down payment. And then, like I said, every client is different. So we want to always make sure that we understand your specific needs, your specific application, income to qualify, type of wages. There's tons of other products like Edwin mentioned. So please don't take that information as very negative that you will never be able to buy it. That's not 100% correct.
Now, can you probably pronounce or say two different programs that anyone who has a DACA or work permit can purchase?
Yeah, absolutely.
After May 21st?
Yeah, after May 21st, you can still buy with conventional financing. It's just going to take a little bit more down payment percentage. So for those type of clients, it's going to be a minimum 10% down for conventional financing. And then, of course, between government financing, which is FHA, and then traditional conventional financing, which is what's considered as the private lending of money, the difference in rate can be somewhere sometimes between like half a percent to maybe 0.75%, almost 1%, but not completely. So it can make a difference on your qualifying factors, but there's always options about adding a co-borrower to help you, push your purchase price back up to the FHA option that you were qualified for. So if anybody has a pre-approval as of even last week and your FHA financing, the type of loan that you're wanting to purchase with, and you fit that bubble within, meaning you're a non-resident or you're a non-US citizen, I would reach out to your lender or reach out to us and make sure that you go through the reevaluation of your financing, because it can ultimately change and you don't want to put yourself in a situation that you're in escrow and you come to find out this type of financing for you doesn't qualify any longer. Your earnest money deposit could be at risk. The time spent, the emotions invested into the house can be also, thrown out the window. So please make sure to reach out to your lender or reach out to us if you have any questions.
That is true. Now, another big news that came out yesterday is about, one second, see. Ready. Okay, so conventional loans. So conventional loans, like there's a lot of banks. Like I know Chase has one of them, U.S. Bank, Citibank, just name a few of the banks. where if you go through them, you're able to do a conventional loan, then you're
Mhm.
able to get a grant. A lot of them is close to the $7,500 up to $10,000 grant, meaning there's not repay money on that one at all.
Correct.
That one is getting, I don't know if it's removed immediately or it will be removed also on May 25th.
From my understanding, it's been removed effectively as of yesterday. So if you're a buyer that's watching this video from us, and you're qualified with one of the retail banks, like Edwin mentioned, B of A, U.S. Bank, Federal Credit Union, Chase, etc., and you're being offered the grant program to help either offset your down payment or your closing cost, make sure that you talk to your lender again and ask them the question, do I still have the option, or what other options do I have now since the grant programs are being taken away from the conventional type of financing option? Now, the grant programs are still available for FHA, but not for Fannie Mae, which is conventional type of financing. So years ago, when the market crashed back in '08, the government basically stepped in as big brother, governing all the different types of banking. The government financing like FHA and VA has always been governed by the government, but Fannie Mae, which was a private sector of financing, was never governed by the government. So after the market crash, they wanted to make sure that the banks are being regulated, being conservative, not being over aggressive when the lending
They're getting
of clients
older.
financing. Yeah, exactly. So as of yesterday as well, Fannie Mae, which is going to be Fannie Mae for conventional, and then Freddie Mac, which is for a different type of conventional financing. Those are now going to go back to the private sector. So they're getting rid of the grant options of being able to, piggyback that with your first mortgage. So again, speak with your lender, ask them if that's going to affect your qualifications, or reach out to us, Edwin and myself. We'd be happy to go over those options with you. Like I mentioned, the grant programs are not going away entirely. It's just unfortunately for the conventional type of financing, it is going away for that type of qualification for grants.
Okay.
And a lot of people are always popular with conventional versus FHA if they're trying to purchase like a townhome or a condo. But there's other options. We could do FHA spot approvals. So again, don't let that discourage you from buying a home.
That is correct. So technically, if you're buying a home conventional, please, in using one of the grants, double check. The last thing you want is be in escrow, and then 2 weeks later find out you won't be able to buy the home because you're short on funds and you were counting on that specific money. So you can talk to us. We have different options as an FHA for grants programs. So those still available, or there's different programs of down payment assistance program. And we have one of those that is 100% finance, correct? Is that one going away, or what is happening on that one?
No. Okay, so none of the DPA programs, which DPA abbreviates for down payment assistance, none of those type of programs are going away because guess what? That's borrowed money. Grant programs are different because those type of monies are forgiven after a certain period of time, either 3 or 5 years. But the down payment assistance, where it's borrowed money, those programs are not going away anytime soon. So there's always like the popular program like CalHFA, which is a California-based program. And it's only for California residents to buy within California. But there's plenty of other type of DPA programs that are not as restrictive as CalHFA. And that's one of the programs we want to talk to you today about. It's called Boost DPA, 100% financing. So you can qualify for either conventional financing, which will be 97% on your first mortgage, and the 3% will be on the second mortgage. Or you can buy with FHA, 96.5% on the first mortgage, and then the 3.5% for your down payment would be that second mortgage. So those programs that we offer, it's in-house. So that means that it's only one underwriting bank that'll be reviewing your package. So that means a faster process to closing. And then more importantly, we're not going to follow any type of conservative debt to income ratio restrictions. So what that means is sometimes with CalHFA, you're restricted with a certain percentage of debt to income ratios, and that can sometimes suppress your purchasing power by either $50,000 to $100,000, depending on your income and your debt revolving and your credit score, of course, as well. So this down payment assistance program Boost, it's all ran through either FHA, AUS, which is automated underwriting system, or Fannie Mae for DU, which is desktop underwriting, in order to be able to get a eligible or approve eligible. And as long as you get an approved eligible, doesn't matter how high your debt to income ratios are and how low your score, as low as 580, you can
580?
qualify for this DPA. As low as 580.
Wow. Because usually Cal Hafa, you mentioned it, is 660 or 640, if I'm not
640
mistaken.
minimum. Yeah.
Yeah, well, it's 580, you know. Si estás atrasado en los paguitos, this is the program right here.
That's true. That is true. Yeah. So go ahead, Edwin.
No. So something you mentioned. So you say a first of 96.6, 96.5. That's usually the regular loan. The other 3.5, right away, you have a second payment is money that is silent for 30 years. What happened with the down percent finance? So technically, meaning one way and another one, they're gonna cover your down payment. They're gonna cover your loan as well. But what happened with the down payment? You pay it right away as a second payment, or is it silent for X amount of years?
That's a good question. Great question. So the actual second mortgage for this 100% financing, it is an active mortgage. So it's not a silent mortgage where you can accrue and add the principal interest back to the base loan amount. It is an active payment on a mortgage. So for example, if the prevailing interest rate is on the first mortgage, if it's at 6.5%, the second mortgage will be fixed at 2% higher than the first mortgage interest rate. So if your first mortgage interest rate is 6.5%, then your second mortgage will be based off of an 8.5% interest rate. But keep in mind, don't let the interest rate scare you so much, because remember, the interest rate on the second mortgage is for a very small portion of the loan amount. It's only the down payment percentage. So whether it's 3.5% for FHA or 3% for conventional, it's a very low payment. So that gets to be, you get to actively pay that as you go every month. So you're not accruing interest, meaning you're not owing more later in the years. They have to pay back that through equity if you either sell your house or refinance your house. So it's a great program. And the more importantly, like I said, this is what helps the most for most people, is that it's not as conservative as Cal Hafa is versus our boost. It gives you more purchasing power. So that just gives you more ability to buy a home sooner than later.
And that's an amazing program. And one of the reasons a lot of banks, they create down payment assistance program is because they know that new generation, millennial, Gen Z, X, I don't know, all those generations, we make a good income, you know. In general, we're able to rent of 3,000, 4,000 a month, but we bad at savings. You know, like our previous generations, they were like at 25, they already have a lot of money saved in order to buy a house. Our generation, we spend a lot of money. We see the new phone, we go and get it. We don't care if our previous phone works. So because of that, they create this program. So that way, if you can pay a house, how can we put you in a house right now without putting a lot of money?
Correct.
Now, let's say, for example, if one client say, hey, I make a great income, I can buy a house, I don't have money. Let's say the program covers the down payment. Let's say you hire someone really professional like our team, and we're able to negotiate for the seller to cover all your closing costs. Does that program requires a minimum investment from the buyer, or they can come with practically zero money out?
They can come in with zero money out of pocket, literally. Just like Edwin mentioned, if you're able to negotiate the seller to cover your closing costs, then literally the only thing you're probably gonna, put in out of pocket is just for inspection reports, which is gonna be home inspection report is not a mandatory type of inspection report for a purchase of a real estate property, but it's highly recommended because it's only a few $100s. The other report is gonna be mandatory, which is gonna be the appraisal report. That can range anywhere between like $525 to maybe $650. So literally for under $1,000, you're able to get into a house if you pair up with the right team. Evan and myself, or the millennial realtors and us, we can literally get you guys into a home by this summer or sooner with almost zero money down out of pocket.
Okay, yeah, and so this is a new program, or has been existing already for a few months, few years?
Actually, that's a good question. The program has been around for multiple years now. It's just now an available product for my line of investors that I work with. So it's just it's a good product for most, and probably like people will say, not every DPA program, down payment assistance program, is best for every person, because not every program is fit for the same client. Every client's different, so we do a very thorough job in figuring out your financing, what's your struggles or what's your hurdles to be able to get into a home, and then we will come up with a game plan for you folks to be able to buy as soon as possible. Because if you're looking to buy and you can afford to buy, meaning the income, but you just don't have the savings, and you're trying to save up, you can be sometimes chasing price at that point, because as you're saving money, prices continue to go up. So it's better to get into a home now and then let equity build. And later, if you wanted to, you can refinance out of this loan and get yourself into a conventional to remove the second mortgage and then drop your payment that much more. So any of the down payment assistance programs do not have any type of prepayment penalties, or there's no requirement of minimum 3 years to finance within this program. Literally, after you buy, if you've either inherited money or you came up with maybe winning the lottery or equity has built sooner than later, you can absolutely refinance and get out of those loans without any type of penalties incurred or any added interest.
If you win the lottery, don't forget about your agent. Okay.
That's true. Now, don't forget referrals for referrals.
Yes. Now, regarding going back to DACA, people with permits, that program is gonna someone with DACA or someone with a work permit, are they able to apply for those loans or not?
Are you referring to like the DPA programs, the down payment assistance?
The Boost program. The one
Boost
I'm talking about.
Yeah, so the two different financing options that you can use Boost with is either VA, which is the government loan, but that only applies to military veterans, or FHA or conventional. So unfortunately for the people that are DACA or a non-permanent resident or non-US citizen, then the only option would be the conventional option for them.
Okay, so technically they can.
Yes, correct.
Okay,
yes.
So we have a solution. We have one of many solutions.
Very true. Yes.
Okay. So super fast, before we talk about what is happening on the market, I just want to say super fast to the few people who are with us tonight. Is one of them is Angelica, Donita, Gloria, Carol, Andrea is here as well, Juan, Isaura, Miss D10017, I don't have a name, but hi, Peter and Raul, and also Jose Luis, he put us a comment on YouTube. So don't forget, whenever you have a question, want to say hi to us, feel free to drop a comment either on Instagram, Facebook, or YouTube. So Jose Luis say, buenas tardes, Edwin, es mi primera vez. Soy José Luis Pérez, espero que te vaya bien como a Flavio, espero que tú nos ayudes a conseguir. So, ya. Hola José, ¿cómo está? Claro que sí, sabe que nuestro equipo le va a ayudar con la compra de su casita. Okay, going back to the good stuff. Okay, so what is happening in the market? You know, what have happened the last 30 days? Jeremiah, what is your prediction that is going to happen? Is rates are going up? Are rates going down? Why?
Okay, great question. So when it comes to the mortgage side, rates were trickling down these past couple of weeks, and that was a little bit influenced by Mr. President Trump, announcing that there's going to be tariffs throughout the countries that are importing goods into the U.S. Now that he's scaling that back, meaning that he's only going to put tariffs on certain goods, that kind of put confidence back into the market, which creates the stock exchange for investors to dump their money into MBS, which is mortgage-backed securities. That kind of scaled back. So that kind of did a little bit of a bounce back on the rates. So the rate difference that we saw probably 2 to 3 weeks ago, we saw about a 0.25% drop in rates on the standard rates across the board, FHA, VA, conventional, etc. They're kind of coming back, but they're still not worse than what they were. But at the same time, it just shows you that the market is still steadily moving forward, no matter what happens with the market changes. Throughout this year, we will see some market changes regarding the interest rates. So what I'm encouraging and telling all of our sure.
What do you think, up or down?
My prediction will be coming down. And that's what I was going to circle back to. If anybody is thinking of buying, but they're waiting for rates to drop, I think that's not the best type of strategy, because as rates drop, then that motivates new buyers coming back to the market, and that only pushes price up. So at the same time, you're chasing price at that point. So our opinion and our professional advice would be purchase while you can and refinance later. Take advantage of locking down your purchase price and later worry about refinancing to drop that mortgage payment. And that way you're still building equity little by little, because those new buyers are going to come back to the market once rates drop. That's only going to help you build more equity, because it's going to drive up more price. And remember, equity is based on price of opinion on what people are willing to pay for a house. So if there's less inventory, more buyers, that's only going to push up the price. So our professional opinion is buy now if you can.
And that's true, like something I noticed is prices are going up. Back in usually what happened after an election, and out of the last 11 elections, 9 of them, usually prices go up. Because one of the biggest conversations we were having last year is, are we going to wait for the elections to happen? So a lot in last year, I believe, was one of the lowest years on number of transactions in real estate in the last few years. So what happened is those people who were supposed to buy last year and waited, they buying this year. So that's one wave. And also the people who already had plans to buy this year, they're also in the market. So you have two waves of families buying. So we noticed this competitive, like back in October, November, December, there was like 1-2 offers. Easy negotiation. Let's open escrow. Now we like negotiating. Oh, we have like 7, 8, 9 offers. So it's getting almost to the 2 digits on the number of offers per property. So we noticed that. Now I do believe it, but I don't agree on the rates, going down as fast. And the reason why is this, because you mentioned the tariff. That's mean what happened when they, you do tariff to products coming from outside. They're just gonna add it to the price. For the car that used to pay 15 grand, now you're gonna be paying probably 65 grand for that same car. We, the consumer, is the one paying that. So that's mean inflation in general for a lot of the products that we depend from people from outside. We're gonna pay more. And I know the federal government kind of mentioned that they're not gonna lower the rates unless inflation goes down. So let's see what happens. To me, it's a gray area.
Yeah, it kind of is. It kind of is. Yeah. It's kind of like a limbo process. So unless inflation comes down, correct.
Yes. But something I do believe is rates will be more like straight. You're going to see like a small ups, a small downs. Like one of the downs, you mentioned it, we saw like 2-3 weeks ago. Okay. So we're going to see that a lot happening in the next few months. From what I'm seeing so far, the confidence of the consumers is out there right now. They're buying houses. Just this week we got at least 3 to 4 referrals coming, calling us, hey, I want to buy a house. So we notice people are buying houses.
Yeah.
So that's a good thing. Like I know a lot of people have been waiting for prices to go down, but keep in mind, if prices go down, does mean the economy is crashing the same way that happened in 2006 and 7. Which one do you want? A healthy economy or really bad economy?
Right. Exactly. Yeah. Because with a bad economy, that's only gonna create more problems for everybody else.
Yes. Now going back to the first subject, so Freddie Mac or Fannie Mae going private. Yeah. That's more conventional, no grants, etc. Is that good or that's bad?
I think it could be a good thing because of the fact that now there's going to be less type of like big brother overviewing their financing options. So that might mean a little bit more flexibility. I know like on the traditional type of financing, which is going to be like conventional, VA, FHA, and et cetera. But there's also non-QM type of products for a lot of buyers, because a lot of consumers or a lot of buyers that don't fit the W-2 payroll situation, like where they're self-employed, they generate a lot of money, but they just don't want to pay a lot back. There's a lot of programs for those type of buyers. So that's what's considered for non-QM. So I just feel that on the non-QM and the private sector, when it comes to like conventional financing and et cetera, it's just going to become a little bit more flexible when it comes to qualifying. So that's going to help out for some of those buyers.
Okay, so technically that will benefit. So
Correct.
you feel that the layer of restrictions on top might get removed, and that will help more families have more diverse options of finance, right?
Yeah, absolutely correct. Yeah. And then more importantly, I think there was a study where it said that there's only 1% that are going to be affected, at least throughout the country, not just in California, but just throughout the country. They're saying that 1% are going to be the ones affected without having that option now with FHA for the non-permanent resident and the non-US citizen. So it's something negative that everybody wants to always talk about. Everybody talks about, negative rumor or negative information before positive information, but don't let that be a negative factor regarding how to get into a home. We'll figure it out for you folks. Call us.
What you need to do is just adapt and switch. Find options, find solutions. And yes, like you mentioned, news outlets, they love, the worse the news can sound, the better for them. That's mean better ratings for them.
Yes.
When I was putting a lot of people posting, I was like, who cares? I don't think who cares they're not gonna buy a house. I'm like, who cares? There's other programs for those people who wants to buy a house. They're still gonna be able to buy a house. They just one out of so many options they're not gonna be able to buy. That's the way I see it.
Yes, 100%. I agree 100% with that.
Yes. Okay. Perfect, Jeremiah. Thank you so much for joining us today. Hopefully we can have you more often here in the live show.
Please, of course. I'd love to.
Yeah. So if you can look this video. I believe it's going to be posted on YouTube and Facebook. So if you want to share this with any friends or family who kind of scared about the situation, share this with them. Hopefully we were able to mention some solutions for them. Don't forget to follow us, and remember, next Thursday 5 p.m. siempre traemos los temas más calientes. Okay. Thank you, Jay.